Starting with just $1,000 and a solid plan can start you on the right foot in the path to financial growth. In today's video, we're going to be looking at 10 actionable plans to build wealth starting with just $1,000. So it's very simple, very easy to get into. But with smart investment, with disciplined strategies, you can grow that into a fortune step by step, leading to big results. So let's go ahead and get into this one. Now, the first one we look at is investing into index funds for long-term growth. When we start looking at ETFs, when we start looking at something like the S&P 500, the NASDAQ, it makes a big difference when you're starting putting money in there because you automatically have a diversified portfolio when you are tracking indexes themselves. When we start thinking of the S&P 500 or the VOO, which is the Vanguard version that tracks that S&P, average returns around 10%. So if you think about it, in the course of a year, you could turn that $1,000 that you have into $1,100, and then it starts snowballing. That is where the interesting part is, because then in year two, you have that $1,100 and it starts snowballing, even building faster and faster. Over time, you can end up with a giant snowball just with that $1,000 that you put in there. Now, of course, if you don't have an emergency fund, this could be the money you're using to start the high yield savings account. Most of them are offering right now about 4%. Now, the big thing with the high yield savings account, or even putting the money in the CD, it is secured. It is usually FDIC or NCUA insured. And of course, it means you're getting a guaranteed return. The return might be a little bit lower than what we see for the stock market, but overall, you are starting and getting a return, which is the same when we look at number three, purchasing dividend stocks. These are passive income. Consider dividend stocks. You put your money in there. It is a stream of passive income that they are going to pay you on a monthly basis, quarterly basis, whatever it does. When you look at Johnson & Johnson, when you look at Coca-Cola, when you put at some of these companies that have given dividends for decades, really at this point, besides dividend income or besides the income you get there, you can reinvest the dividends. Now, this, of course, is going to grow that snowball. So if you think of a stock increasing not only in the value, but you're also yielding dividends from that, it can really make that snowball build a lot faster. Now, the fourth one we look at, launching a low-cost business. Now, when you think of a low-cost business, something like YouTube comes to mind, but looking at selling crafts, freelance services, teaching tech skills online, just grabbing a camera, getting a phone. With the $1,000, you could get basic tools, you could get marketing, you could get a setup. And of course, when you start looking at a business, this could be the slingshot to getting you to where you want to be. Me personally, I've always dreamed about financial education, and doing it on YouTube is a perfect platform for me. So if you like the content that I'm putting out, definitely subscribe to the channel. Let me know below what you think, and let's continue with this list. Now, the next one, investing in peer-to-peer lending for steady returns. This, of course, is Lending Club. There's a lot of other companies that are micro lenders. So what they do is they pool a bunch of money together. They take that money, they lend it out on personal loans, they lend it out on small business loans. They give you an annual return of about 5 to 10%. So very close to the S&P 500, but you have to remember, when it comes to peer-to-peer lending, there can also be a little bit more risk depending on how risk adverse you are. Little riskier, but of course, when you look at a multitude of loans where if you're taking that $1,000, you're doing 10 loans grouped with a bunch of other people, chances are not all 10 loans of those are really going to go bad. If that was the case, Lending Club would probably be out of business, but it does offer you a pretty good return. Now, another one that we see, and I see this like crazy, and I want to talk about it for a minute, flipping undervalued items on online marketplaces. So when we think of flippers, when we think of the garage sailors you see on YouTube, you see on TikTok, when you see, the people that are reselling shoes, when you look at Pokemon and Magic the Gathering cards, there are so many different things that you can purchase and set them up on a platform, looking at eBay, thinking of Facebook Marketplace, simplifying and allowing bulk purchases and making money this way. There's a lot of people, crazy enough, that I've seen trade Pokemon cards that are putting themselves through college. That's right. Flipping and buying and selling Pokemon cards is paying for a formal education, which is kind of crazy. Now, when we start thinking about skills, acquiring a marketable skill through online courses. Now, if you want to talk about Warren Buffett talking about an investing, the best investment is always in yourself. Using that $1,000 to enroll into online courses. If you look at data analytics, design, coding, Udemy, Coursera, there are a lot of courses out there that you can get that can enhance your skills, giving you not only the ability to be a lot more profitable, but it could also be growing in your field depending on what you work in and what kind of degrees. Now, when we think about contributions and when we think about doubling contributions, we have to talk about IRAs, contributions to the Roth IRA for future wealth. Now, this, of course, if you're putting money into a Roth IRA, this is tax-free growth. And then during retirement, it is going to be tax-free withdrawals. This is the time to start building out that nest egg and really understanding exactly how much and how magically the compounding interest does work. Very low risk. You have to make sure, though, when it comes to IRA money, that it is invested in the place. I stress this a lot. Don't leave your IRA money at financial institutions. Make sure it's invested in the stock market, the S&P, whatever it may be, that it is invested in its entirety. And the final one we're looking at is fractional real estate opportunities. This brings up Fundrise. Now, Fundrise actually just had something, I believe it was North Myrtle Beach, that they were guaranteeing a 16% return on there, which is kind of crazy. So if you don't have the ability to buy property outright, looking at some REITs, looking at platforms like Fundrise, you can invest as small as $10 in here, which of course is really big in the rental income market and the appreciation of the homes themselves. They do pay you, and I believe it's quarterly at this point when it comes to the dividend, depending what you're really built into. So you could take that $1,000, you could really break into a portfolio where you're investing in real estate, which is pretty cool. And the final one here is starting a personal investment fund for an ETF. Now, exchange traded funds are my absolute bread and butter. I love it. Looking at different sectors, looking at industries, even thinking of the index investing, ETFs make it accessible and it is at a fractional share. When you think of like spider funds, the SPDR or Vanguard ETFs, they carry a variety of risks, so make sure you do your own research before you get invested in those. So, all right, guys, so that is going to do it for 10 actionable item plans to build wealth starting with just $1,000. So it is very basic, it is very baseline, but let me know in the comments what you guys think. And as always, thank you guys for watching.